My name is Joe Mazumdar, Exploration Insights. We have 6 people here from different companies, and I'm going to actually talk through what we proposed initially this year in terms of what we were buying, what we were selling, and I'm going to give you some examples at every stage. We're going to go a little bit through the Lassonde curve and talk to you about what worked and what didn't, and potentially introduce some of these companies on the way. So I'll get started as the door's opening and closing. Okay, so we're going to talk about our commodity focus, why we think these commodities work. The time frame is sort of embedded in your decision. Are you a short-term trader? Are you a long-term trader? Depending on the stage of the asset, that will basically dictate what your time frame is. And then we'll talk a bit about the issues over the last week that have been building since late December, early January, and talk about the lessons learned. So I'll get going. So one of the macro themes that we're dealing with is this reduction of global greenhouse gases. So whether you believe in climate change or not, or that it's anthropogenic or not, the issue is that people are spending a lot of money. And it's being mandated by a lot of regions. And these regions have a significant impact on the globe in terms of GDP. So the European Union, Japan, China, the US and US and India are all in significant reductions of greenhouse gases. And so we're looking for exposure to that overarching theme. And so if you look at it from one person's perspective, or one company's perspective, like Norilsk Nickel, which happens to have several of these commodities that it produces from its massive mines in Russia, is palladium, nickel, and copper. And those basically are our 3 focus areas. So with respect to nickel, it's about the issue with the electric vehicles, and the batteries, and now there's more heavy loading with nickel. So nickel's very important, and that's vehicle electrification. But also we've got copper, and copper's great because it's got the infrastructure development issues that it actually has a pull for demand on copper. But it's also in vehicle electrification and also loading. So everything needs a lot more copper than before because they want to electrify a lot more. And then the other one is in the interim, before the penetration rate of electric vehicles comes in, the emissions issues are still happening. So in the interim, you need catalytic converters. And since there's less diesel cars and more of the cars we drive, normal fuel, palladium is the preferred catalytic metal for those catalytic converters. And that's why palladium, that I'll show, was the only metal that actually beat the S&P 500 over the past decade. So there you go. So you can see that palladium was up almost 360% over the past decade. And, obviously the S&P did very well, but that was the only one that actually rivaled the equity market. Okay, so why is palladium done so well? Again, even Norilsk, out of all the metals it produces, the one that it's most confident on that it will get a good price out of is palladium, because the deficits continue and there's a big demand for palladium because the palladium loading has increased in each vehicle. So even if you sell less vehicles, the amount of palladium in each vehicle is actually increasing. But the problem on exposure is we're only really got South Africa and Russia with respect to PGMs. We've seen acquisitions in North America by the South Africans, with Sibanye getting into Stillwater, and more recently Impala Platinum buying North American palladium. So we do have some of that M&A underpinning for palladium. And in terms of copper, like right now with respect to what's happening, I probably wouldn't buy a copper producer, but we know that there's a pipeline issue with copper. Not a pipeline issue like in Canada, but a pipeline of projects issue where there's a gap. and we don't see projects coming into that gap. And we can see the projects because you need a feasibility study now. You got to start the permitting now to actually fit this time frame. It's not like somebody's going to fall into this space a year before we have this gap. So that's our interest in companies like Trilogy Metals, which is permitting and advancing their Arctic deposit in Alaska. So that fits that sort of time frame. So, and then the focus on nickel is really about the increase in and the penetration of electric vehicles and the share of nickel in these batteries. So originally the batteries were, in terms of nickel, cobalt, manganese ratios were 1:1:1, but now the idea is to have higher density batteries, less exposure to cobalt, and now the proportion of nickel to manganese to cobalt is like 8:1:1. So if that's the battery of choice going forward, then that's going to need more nickel. And you got to understand the types of nickel. And so what's driving the nickel price last year in that was basically the nickel pig iron market prices to go into stainless steel. It wasn't nickel sulfides or this battery issue. We're looking more of the longer term issue in about 5 years and the lack of nickel sulfides. So those nickel sulfides produced at concentrates, those concentrates are easier right now metallurgically to produce nickel sulfate, which is the product you want for a battery. Okay, and so why do you want to add this value? And Blackstone can go into Blackstone Minerals, who is here, ASX-listed company who's developing an asset in Vietnam, the Tacoa, is you want to get to where you could produce at least the copper sulfate. Because then not only do you avoid the discount of the TCRCs, the treatment charges, and the refining charges of a smelter, but you can actually get a premium on the nickel sulfate product from the LME cathode price. And so what are we dealing with now over the last, 6 weeks to 2 months, is this COVID-19 coronavirus, which has embedded a near-term risk that we've all lived through for the last couple of days. So originally, this was just a China issue, which is big enough with respect to China's growth and global impact. But now more recently, it's also impacting other nations, and that might slow down more economies. And so China's impact on global economy is obviously significant. But in terms of when we had the SARS virus out, that was 2003. So that was 17 years ago when China's part of the global economy was about 4%. Its economy, GDP, was about 1.6 trillion. Now it's 13.6, and its part in the global economy is about 16%. It exports $2.5 trillion worth of goods, whereas during SARS, it exported less than 500 billion. They've got more billionaires, they've got more tourists, more Starbucks, and there's more hotels. So there's much more Western influence in Asia, or in China right now, that impacts these companies. Hence the reason that Apple put out that warning that sent their valuation down about $230 to $250 billion in terms of their production of iPhones out of China, which would impact their sales. And posthumously, Goldman Sachs put out a note saying that the profit growth of the equity markets of these companies, U.S.-listed companies, is going to be basically flat. And that's the other leg that we've seen this downward spiral. And so that's what we're seeing right now. So what we've seen, so this is a year-to-date number here on the right, and this is last week. So a lot of the volatility that's come up on the VIX has just been this last week, but year-to-date, it's spiked up 190%. Palladium's still up, gold is still flat to up, but most everything else is down. Like you could see where gold is okay, but the GDXJ is down quite a bit. And herein lies the opportunity. Because in 2008, we saw a reduction also in the underlying commodities. Like here with gold, especially, we don't seeing that. So hence with some of these commodities, we might see a V-shaped recovery rather than a U-shaped recovery. And then you have to manage really what stage you want to be in with respect to exposure. So in terms of base metals, the issue is basically China remains the biggest consumer of these commodities, and it's the reduction. We don't know. That uncertainty is what's driving this. For copper, for nickel, for zinc, for lead, and probably other commodities, including WTI. So this is basically the VIX. The VIX spikes, and when it spikes, this is over the last 10 years, the last decade, and so you saw that spike here when gold got up to 1890, and we've had other spikes, and sometimes the spike, the volatility, does not impact the gold price. But here it has, not so much, but here it definitely has. But now the drag on the equity market, margin calls, has dragged gold down a bit, but it's still at a price where a lot of these companies still make a lot of free cash flow. So the real underlying reason to be positive about gold is the amount of negative yielding debt that's not going away. That's the medium, long-term argument for gold. This coronavirus is helping, hurting, generating some volatility, but it won't be the reason that gold stays up. So importantly, last year, we saw gold up in all currencies in 2019. Average was 18%, and that's a real positive for the gold market. I did this graphic 3 days ago, and gold was up much more in all currencies before I did it and updated it for yesterday. But it's still up 9% year to date in all currencies. And some places it spiked even more because of these countries like Australia and South Africa's exposure to China with respect to selling commodities. Their currency has been negatively impacted. Hence, locally, their gold price or whatever commodity price, even palladium, actually has gone up. Okay, and then the U.S. dollar. So we always talk about this inverse relationship with gold, and so you know this is the DXY, the trade weighted index for the U.S. dollar. But I've inverted the curve, and so when DXY goes down, it's actually getting stronger. Okay, and so it's moving with gold. So when the DXY had that big increase, the U.S. dollar was getting stronger. That collapsed the gold price down to here. But what we're seeing now since 2018, it's still strong. I mean, it's not going down, not increasing precipitously, but it is still increasing, but gold still is going up despite that. And so when we look at the equity side, we can compare the S&P 500 over the last year and to this year. You can see the S&P 500 has had a nice little run there and then absolute collapse just this last week. The GDXJ was actually outperforming it until just 3 days ago. And that's where we've seen a collapse. This is what I think will be more like a V. I don't know where this is going to go, but this can't stay there, given where the gold price is right now. So we're still waiting on silver. That's another commodity we're invested in. But you could see that here is when it was down to the 30s and people are hoping, praying that it might come back to this. I don't think it's going to come back to this, but even if we get it somewhere around here, that would be a positive for anybody with significant silver exposure. Okay, so this is a bastardized, can I say that? I just did. Version of the Lassonde curve where I detailed, the stages, what you're looking for in terms of studies when you look at these projects, what kind of financing they would do at that level, who would be running the company, and basically the risk profile. High risk, high reward, lower moderate risk, lower reward. And then basically geopolitically, where are you more concerned? When you're dealing with grassroots, you care less about geopolitical concerns. But when you're spending money, you do care, because that's the money that can get taken away. So I'll remind you, I'll show this curve a few times, but our points of entry on this curve are in the grassroots and can include prospect generators, the development stories, and also with leverage on the producers. Because when the prices actually do go up, the ones that'll get hit first will be the liquid solvent producers. So here's an example of a company that did well for us, and this is a royalty generator, EMX. So we've had this for a while. We've several positions, but the big deal for them was when they sold this copper asset, again copper, in Russia to a Russian company. So from there, they had a lot of cash, and they'd been building that cash profile, making more transactions. But I sold around here. It went up, went back down again, but I made a good return. And the whole idea with the portfolio is to make money and sell. We can't hold things forever, and nor do I want to. But then take that money and put it into something else. And so what I put it into was Alta Strategies, which was the same model of EMX, better valuation, but totally Africa focused. And there's obviously a lot more geopolitical risk in Africa, but the way to play it, I think, makes more sense with them because it's not just one country. It's multiple countries, multiple commodities. And who else like that was La Mancha. So La Mancha is a big a private equity firm run by money out of Egypt. And they're into a lot of African producers. And this is the first time they've ever put money into a non-cash flowing company. And so what didn't work, because it's not all roses. So this one I got in a spin out of this other company. Like the management team, they knew Mexico, we could hold it. But the problem was when you have these prospect generators, you want a long-term profile, you want to think about, but the problem is the management's focus, they were on 3 different companies. And their focus was on a development company, Almaden, and they also had another one, Asukar. And so this one was basically being orphaned. And so it was just basically dead money. And so I sold this one at a loss of about 30%. And so with respect to prospect generators, granted, they're not for everyone. I know people in Australia that just loathe them. But, it's all about dilution. And dilution happens both 2 ways, equity or asset level. These guys prefer to do it at asset level and keep the dilution at the equity level limited. You need a long-term strategy. You need to have a management team that you trust in the long term, a lot of expertise technically, but especially because of the companies. The companies now have basically given their exploration expertise to these prospect generators or explorers. So their ability to do a strategic alliance or a joint venture really matters and depends on the individual company's expertise. So that negotiation skills and the ability to formulate JVs, that's very important. Okay, so now we move to exploration. We're still down here, and I got to move. But so Radius Gold. So Radius Gold, grassroots explorers, Mexico, Guatemala, and Southwest Nevada. And so they did a joint venture with Pan American, and they hit something. So they discovered this ore chute, basically 44 meters of 12 grams was the first hole, and they more than tripled their share price. And that's what we want. And this is a discovery. After that, the next holes didn't hit as much, but it's still a good team. They've got 1 ore chute. They've added land to it. Pan American is still involved, and they're operating the joint venture. They've got more ground, and it's a great enterprise value. So we continue to hold this one. I never sold this one. Okay, the other one that I added recently was high gold mining. And so this is Alaska-focused, very high grade. And so the previous workers drilled 109 meters of 10 grams of gold with 7.6% zinc. So and continuous. And that's the big thing about if you want to get taken out, you got to have high grade, but it's got to be continuous. You want it thick. And this has got all of that in one deposit. Right now it's small, but now they're finding and they're exploring beyond what they found originally, which is important. And so right now, after Friday's close, this one would be one for you guys to consider. I already own this, and I'm actually at a loss right. No, I'm flat right on that one. So Chicana Copper is an example of what didn't work. Okay, so I like the CEO. He was very technical. I like the asset, which got proven out with Gold Fields coming in and giving them money. But the problem was that they were in a moment where Peru was changing governments, and the permitting on the asset that I wanted drilled was taking way too long. We had the corruption that is prevalent in Peru actually come into the company, such that one of their senior management was actually siphoning money, which was problematic. I sold it at a big loss, 70%, because the problem right now is that the management trust is gone. So for me, the problem is, how are they going to raise money in the market again? So I got no problem with the asset, but on an equity basis, are we going to make any money? And I decided no. And so again, grassroots explorers, they like to own it, everything, but now with the financing risk that still pervades the market, joint ventures, deep pockets are helpful. And so you just recently saw Japan Gold, which I also own, formed a multi-year strategic alliance with Barrick, and that's 28 out of 30 projects that they have in Japan, which is a bonus for them because they can advance a lot of them at the same time. Okay, developers. I might not get to producers, but you can ask me later. So developers, I always find, are deeply discounted and potentially rightfully so, because you got the financing risk, you got the technical risk, you got the execution risk in a management team that may not have all the players. But if you can find one with those players, that's what matters. So one was Gold Road, and so that went from discovery to commercial production in 5 years, which is unheard of in Australia. So I bought that one. Rising gold price in Australia helped. A Gold Fields joint venture helped assuage the market of the issues with technical and execution risk, and now it's in production. So I sold 2 positions of that and used the money to buy other things. And so one thing that didn't work was lithium. So a development play in lithium in northwest Argentina. Problems? Argentina got worse. But also lithium got worse. And the actual thesis worked out. My thesis was they would get bought out by the producer in the same salar. That happened, but at a much lower price. Okay, the one that's on the panel that is one of my top picks is Bluestone. Okay, so why is Bluestone different? Is that it's got a development feasibility stage project in Guatemala, but it's already permitted for 1,000 tons per day. They just need to modify it. They've already got 3 kilometers of underground development, but importantly, who's coming in? So now the Lundin Group owns 30% of it, and they're bringing their people from who just built Fruta del Norte to look at the asset. So they want to build this. And what we've seen with premiums nowadays, you're not going to get a 60% premium on an asset. You've got to add the value yourself. And if that management team cannot add value, you're screwed. So you got to pick those guys that can actually take it forward. And I believe Bluestone's one of them. Okay, I'm going to skip this. I'm going to go straight into production. But Sandstorm. So I like that one, but I sold it. Why? That's what I do. You know, I'm not into holding forever. So I sold it, but I sold half because I still like it. Okay, great team. They've been buying near-term royalties, record production in 2019, but I used that money to buy something else. What didn't work? IAMGOLD. My God. Clueless. So you can have a high beta play to gold. You can have working capital, which I wanted, but you can have them go down every time they open their bloody mouth. And that's what happened. Every time they released their quarterlies, that was it. And so again, another issue with lack of confidence in the management team. And so I sold it. It was flat, but it was just a joke. Pan American. And so here's one that you get silver and gold exposure. One of my top picks. And then you get a development option in Cascabel if that turns. Right now, the market's not giving them much for it. But if that happens, that'll be huge. But in the interim, they're doing well, and they're generating operating cash flow and free cash flow now, once you take away the acquisition of Tahoe. And now they've just made a discovery at La Colorada, which a skarn deposit. So that's another one that I like. Okay, so the rising precious metal prices, impacts the cash flowing producers first. And so that's one place to get this V right away is people like Pan American and people like Sandstorm, and they're liquid and solvent and generating free cash flow. So the management strategy is important and performance history. But really, in terms of the list, prospect generators, Altus, Mondoro as a pair, Mondoro speaking here, Grassroots, Radius, like I talked about, West Haven that are talking here, High Gold that I mentioned. Development stage, we've got basically all of them right here. Trilogy, Platinum Group, Blackstone, and Bluestone, black and blue. Producers, not here, but what I would talk about would be Pan American Sandstorm. Okay, that's it for me. Thank you very much.